Exercise 7, you had to do an income statement. So as we know, the first thing we do is we write down the amounts we have. So I've got sales, cost of sales, less debtors allowance. Then I see there's rent. Salary and wages. I'm not going to read everything. I'm just going to write. And I'm quickly going to pause that you don't have to. Okay, I just want you to see here. Can you guys see that this is the second method, where they have the gross salary and then they've got the employer contributions all as one amount, split from salary. I also want to say I'm at this stage busy with salary and wages with the grade 10s. I'm recording every lesson so that you guys can go listen to it. Okay, so at this stage there's already 3 lessons on. The one is an intro to salary and wages where I explain the deductions. Then the one is the salary scales. You don't have to do that because we won't ask you salary scales. And the one we did today, we start doing how to calculate this stuff. Okay, so it's very basic stuff. So let's start. Number 1, a debtor, Heyman, returned damaged goods. Now, I just want to quickly make sure you got this. There's 2 scenarios with debtors to do with sales. So, if a debtor buy stock, a debtor. So in other words, we sold stock to a debtor. Your sales will increase. Your cost of sales will increase. Your debtors control will increase. Your trading stock will decrease because you're giving stock to them. If a debtor returns, your sales will decrease, your cost of sales decrease, your debtors control decrease, but your trading stock increase. Can you see it's literally just the trading stock that's different than the rest. So now they say here, this debtor returned damaged goods, which means I'm going to work with this. So I see my sales will decrease, remember, with the sales price. Sales price 4.2. My cost of sales with the cost price, which I need to calculate. So 4.2 times 100 over 160, because my markup is 60, gives me what?
2625.
2625. And you can see it's also a minus. Now for myself, I'm going to draw a T here for trading stock. Trading stock is going to plus with the 2625. And cost of sales, not cost of sales, debtors control is going to minus with the 4.2. Okay, I'm going to use highlighters because I like highlighters. And I'm going to say, okay, can you see? Sales, selling price, and cost price. Okay, next one. And this one is how they give it, and then you all get confused. Remember, if I count packing material, I want to split it into used and unused. Right. The used goes to the income statement. The unused goes to the balance sheet. So now look what they say. 535 was used. So they give you the used, not the stock take. So if I go to packing material, I'm not going to use that. I'm going to straight put in 5350.
Yes.
Next one. 31st of December physical stock take 64,700. And if I go look at my trading stock in the trial balance, recorded was 70. Now already you ought to be able to see that the minus side short, meaning this is a trading stock deficit. So trading stock deficit. Now, can you see you take the 70, you add the 2625, and you subtract the 64.7. So what's my deficit?
7,925. Then I wanted to ask if we do it in the form of a T.
So I only wrote this down here because in the previous class kids were struggling with the adding of the 26. Ne? So I'm writing this down so that you can see the T is fine. If I can see your T, if it's done in the vicinity of the income statement, you don't have to rewrite the calculation in the line. You can just leave it like this. I would suggest that you actually do this. You say, okay, this trading stock is there. Then I can't miss it because you arrowed it for me or you numbered it. A lot of people will do like, this is number 1, this is number 1, and the other one is going to be number 2 and number 2. You number your adjustments. It just makes life easier that I see where your adjustment is going. Okay, next one. Is it big enough like this for you? No, yeah. So I'm going to leave it like that. Next one. The tenant paid until November. Now if I look here, my year ends December. So can you see, if I draw my financial year ending 31st December, he didn't pay 1 month. So 1 month is short. So this guy only paid for 11 months. Okay, so I know if it's short, it's accrued, and accrued is a plus. So now I say, okay, when was the increase? Oh, it was what?
1st of June.
1st of June. So if I count January, February, March, April, May, 5 months, 100%. June, July, August, September, October, November, December, 7 months, 110. An extra month, also 110. You agree with me? Okay, because this is more after the increase. I want this. This is the thing I want to calculate. So now I go. I say.
Yeah, ma'am.
Huh?
It's not the same. It's giving 30 months.
Oh, okay, so this is wrong. So it's June, July, August, September, October, November. This is 6 months. Thank you. So I say 5 months at 100, 7 months at 110, gives me 500. Am I still right? 770. Because I take the one in advance also. Ach, the one. No, I'm lying. This is wrong. It would be 6. I don't have the 7. Oh my goodness. Okay. So this gives me 160. Thank goodness I got something right. So now I go look, what is my rent? It's 46,400. I want the unknown 110, the known 100,000 million and 60, and then I get what? 4,400. And that 4,400 will be added to my rent. So this is going to be 5,400. Happiness. Next one. The utilities account. What is utilities? It's not knives and forks. It's water and electricity. Utilities, has not been paid. So it's an accrued expense. So it makes it more. So this is going to be 10,000. Received 600 Rand from the insolvent estate of hand. 40 cents of every rand must be written off. Oh, I calculated it wrong in the other class. Okay, let's quickly see. That means, so they give it weird here. They say 40 cents must be written off. So that's 600 is how many cents? 60 cents. So I'm going to say 600 unknown over known is going to give me 400. No, am I right? 400. 400. Okay. So I'm going to add 400 to the bad debts. And I'm going to subtract 400 from the debtors. I just want to make sure you cannot say that this 600 is bad debts recovered. Can't do that. Because what is bad debts recovered? Bad debts recovered is if I already bad debted a debtor and now he pays.
But if he pays this 400.
This one is insolvent, so he pays me part of his debt and the other part I need to bad debt. Can you see? He hasn't been bad debted yet, so there's no bad debt to recover. You get what I'm saying? So I'm going to write this down for you. So bad debt recovered will look like this. Bank, bad debts recovered. And they will say, received 500 rand from a debtor previously written off as irrecoverable. Okay? The insolvent guy will look like this. Bank, debtors control. Bad debt, debtors control. Can you see? Because his debt becomes less. Okay. This guy here doesn't have debt anymore, but he still pays me. So let's go on. Next one. Bank charges and interest. Those ones are easy. I'm going to add to the bank charges. How much? 250. And the interest income 150. Okay. We move it up. Now I have provision for bad debts. Now look at this. They are giving me the new one. Can you see? It must be adjusted 2. So they already give me the new one. So the 2 is 2, 2. The 2 is 2, 2, which is the new provision. The old one, I see it's 2, 4. And I'm going to subtract the 2, 4. And it gives me minus 200. And that minus is my adjustment, and it's an income. So in the income, I'm going to say provision for bad debts, adjustment 200. Insurance is always prepaid, so you go minus there. Insurance includes a premium of 2,400 paid for the period 1st August to 31st July. Can you see it's an annual premium? It's 12 months. So if I look at my financial year, it ends 31st December. This thing is 1st August till 31st July. So you can do 31st July. You can do one of two ways. You can literally go and count the prepaid. So I start the end of my year and the end of the insurance year. So it would be 7 months. January, February, March, April, May, June, July. 7 months. Or I can go and I count what is part of my year. In other words, August, September, October, November, December. 5 months. And then I say 12 less 5 gives me 7. Okay. Whichever one makes more sense. So I take the 2,400, 7 over 12, and what's prepaid? 1,400. So I'm going to deduct 1,400 And that gives me 7.4. Next one. One employee is omitted. Omitted is a fancy word for left out. It's omitted in the... So if you don't feel part of your friends group, you just say, I feel omitted. So you are omitted in the salary journal. So what do I want? I'm busy with the income statement. So I want the gross and the contribution. Now if you look here, you can see they didn't give you the gross. But I know what is the gross. The gross is before deductions. So they give me the net and the deductions. So you are used to them saying the gross less the deductions gives you the net. So the net plus the deductions gives you the gross. So I'm going to add those two. The 9.2 and the 2.4. I would prefer that you write them separately and not as 11.6. Because there's a chance that you can add wrong. You hear? Okay. And then the employer contribution is separate, 350.
That was straightforward.
Yes. So now the next one is the loan statement. And now I can sing my song. So, can you see I'm doing this on my question paper, which means I have to rewrite it on my answer sheet. So I'm not going to do it here because I'm lazy and I want to finish my paper. So I go and I do it on the answer sheet. And I say interest expense is there, or I say this is adjustment 2. You see? So I say I've got an opening and a closing and a bank and an interest on loan. So my opening is 270. My closing is 215. My bank is 70. So what's my interest? Now remember they say this includes the interest. Ne? So I know the 270 less the 215 gives me 55. So if this 70, 55 is payment on the loan, it means 15 is interest. You can do it like that. Or you can just say 270 less 70 less 215. Or you can say 70 plus 215 less 270. You will get 15. Remember, it's in brackets there. Depreciation, and again there's not a line for depreciation, so I'm just going to say, oh, let's prop it in somewhere. I'm going to prop it in there, and I say depreciation is 15. So there we go. Then I see interest on fixed deposit was not recorded. Okay, interest is not capitalized. Now let's quickly think. Interest on fixed deposit, if you go look, has got a balance of 13,750. Right. There. They give it for you there. Now I go look, what is my fixed deposit? Oh, it's 150. And it's 10% per year. So I say 150 times 10% gives me 15,000. Meaning my profit and loss, the part that goes to the income statement is 15,000. You see? But I already received 13,750. So, what is left? 1,250 is going to be a accrued income, which will go to the balance sheet, which I'm not doing. What would be different if they said the fixed deposit is, the interest is capitalized? What will change in this T? There's only one thing that's going to change. The accrued income is going to be fixed deposit.
Oh, you add it.
Because what is capitalized? Capitalized means I'm going to add it to the original. You see? Easy as that. So capitalized, not capitalized, the only thing that tells you is whatever is outstanding is either, if it's capitalized, added to fixed deposit. If it's not capitalized, added to receivables as an accrued income. Okay. But the rest is all the same. Capitalized or not capitalized, I'm going to add 1 to 50 here because this should be 15. You see? Okay, don't go and add 15 because I already received 13. So now I see this is 15, 1, 50. And we are done. So let's close off. What is my sales? 702, like that. And my cost? And my gross? Sorry? 5,800, thank you. So this is going to be 51. Thank you, baby. What is my gross? And if I bottomize, is that right? What's my salaries? 135,600. And this is going to be 11,150. 36, 430, 7,800, and 6,910. What's my expenses? Sure, it's lucky that everything is just happening for you now. 2, 4. Okay, and then my operating is going to be 4, 7, 2, 0, 1, 1. Okay, so I bottomize. It's 12, it's 4, it's 5, it's 2, it's 1. Is that right? Okay, I minus. Okay, there we go.